We gonna make it. 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 Hey, what's up, people? Your boy Trader Dot here on this lovely Thursday night. Last night I had my man Tony C the Cannon doing it. As we spoke about, we're gonna start being so trade oriented. We're gonna start doing business, entrepreneur, and trading, of course, because it is called Trader Die. Yeah, people, on this Thursday night, you got me. We're gonna talk about what we talked about the previous night, technical analysis. The first night we did the technical analysis, we stuck to the basic support and resistance. And just to go over like a quick review of that, just remember that support and resistance is exactly what the words say. When the price is on a support line or support, the price is being held up, it's being supported by that price point. Likewise, when the price reaches a area of resistance on the chart, it's being resisted, it's being pushed back. So as we discussed earlier with the price points, with the support and resistance, it becomes easier to know when to buy and when to sell. When like again, people, these words are very easy. The terminology, support, it holds up the price. So just an example, just like this Apple. If the price of Apple is at $5, it goes up to $5.10. Let's say it goes up to $5.50, but it dropped back down to $5.10. Every time it hits $5.10, it bounces back up. So then $5.10 will be known as the line of support. So you will know when it hits $5.10 to put in a long order because it's going to bounce back up, which would be vice versa with resistance. If the price of $5.10 was a line of resistance, which means when it touches that price, it bounces back, it goes back down because it's being resisted. When the price is being resisted, it's being pushed back. Like I keep saying, man, these words in Wall Street are very simple. I think people get caught up in trying to know it all without, keep it simple, stupid. That's the best advice I can give people. Keep it simple. All right, people. So our next lesson, we're going to get into Japanese candlesticks. And I got a guest, my man Sanchez. He was on the other night. What's up, Sin?
Hey, how's it going, guys?
All right. All right, yeah, Sin. So, this guy, he's a good technical trader. He's a forex trader as myself. And one thing you want to emphasize about the text people, the technicals allow you to go through any market. So you don't really have to be a specific stock trader, futures trader, crypto trader. It's basically pattern recognition, able to spot patterns. That's all you do when you tech trade, people. You're going to see the same thing over and over. We can't emphasize that enough. All right, so
Yep.
So Sanchez, tell them about the body of the candlestick. Matter of fact, tell them about the history of the candlestick and the body. I'm about to put this screen share on while you talk about it, my friend.
Okay. Hey, guys, can you hear me well? Can you hear me good? All right, cool. Yeah. So in regards to a candlestick, that's really the holy grail. A lot of people go looking for different systems with indicators and things of that nature, but to be honest, the holy grail is going to be with that candlestick. So you want to know the candlestick anatomy. And what do I mean by anatomy? Well, I mean, you want to know about the high, the low, the open, the close. And if you really want to start talking about it, it's 4 pieces of information that you really just want to go ahead and start studying. This alone is going to take you to that next level. I do apologize for the noise in the background if you hear anything. Let's step away for a second here. So yeah, going back to the candlesticks, you have your high and your open, your low and your close. And what does that mean? That means when we're looking at the market, we're looking at different sessions, right? So if I'm looking at the daily candlesticks, for example, that means each candlestick represents a day. So a good way to talk about this is in that format, right? So what is the open? What is the close? What is the high? What is the low? It's not confusing. It just means that those are 4 different price levels at 4 different times. So if something opens up at 12 p.m., well, at 12 p.m., it will have a certain price level. So you say that's the opening price. And let's say that trading session closes at 5 p.m., right? So we'll do like 10 a.m. to 5 p.m. If it closes at 5 p.m., that's your high price, all right? And then the other 2 points is your high and lows. So what was the lowest price that candlestick reached, that price reached? And what was the highest price that instrument reach during that time period. In this instance, the daily time frame. So that should help explain the daily time frame, the four pieces, the high, low, open, close. Would you
Yeah.
like to go ahead and elaborate that on that?
Yeah, yeah, continue what my man Sanchez was saying. He pretty much covered it all. Just like those are the four most important price points of a candlestick of any matter of fact of any chart object. Cause you know
Any
you got
chart,
bar
any
pattern,
financial chart,
any
yeah.
financial
So
chart.
when
Those are the
dealing with candlesticks, this is
yo,
the
that's
four. Yep.
that's the meat. Now also, so remember there's two types of candlesticks, as we always say. You know, you got bearish going down. So a bearish candlestick is when the opening price is lower.
Yes.
Sorry, it's a bearish candlestick is when the close price is lower than the opening, which
Then
means
the
that
opening.
it opened at a price and it dropped down, which means it was a
Hmm.
bearish day because bearish is down. Vice versa, when it's bullish, a bullish day is when the closing price is higher than the opening. So you see how this is
Yep.
open close, um it'll be inverted closed. So which means that it opened at a certain price, let's say $5, but it closed at $5.08, which means that the close was higher than the opening. And in turn, depending on the software, it'll make the candlestick either white or black or red and white. So it just depends on what software you use. All right, now continue on this example. Now there's a plethora of candlesticks, people. There is so many candlesticks. I just try to focus on the most common ones for now. So the first one we're gonna go over is a doji, Doji. All right, so I got the screen share going on. You can also go to Google and you can put that in the Google search engine, Doji. Now, as we see here, the doji. Explain that to him, Sanchez. Why?
It's breaking up real bad.
Sorry, Sanchez. All right, we think we have a technical difficulty.
Yeah, I can hear you.
Okay, yes,
Yeah, it was breaking up there.
yeah. Explain to them of what a doji is.
So Doji candlestick, that's when we still have our four pieces, our high, open, and low. With the Doji candlestick, it's going to make a crossing pattern. All right. So this is already we're talking about different patterns. So this pattern, this particular shape, when you're looking at candlesticks, you want to think about like symbols. Okay. So based on the way that candlestick is laid out, is a symbol of what's going on in the market. Okay. So the Doji is an example of
Indecision.
neutralness. All right. And what that means is there's no buyers or sellers in control. They're pretty much neck and neck. And so
Right.
that's what this
So
particular doji candlestick pattern means.
yeah, exactly. It means like it's indecision. Like either the buyers or the sellers couldn't overpower the day. So as you see here, it was a very small movement between the opening and the close, which means that there wasn't that much movement. So the thing with the doji though, if you spot a doji in the trend, that's a good indicator that the trend is about to end. Like again, people, this
Hmm.
there is no 100% surefire way to say trend's gonna end. That's the thing with technical analysis. It's pattern recognition. Like you start spotting dojis in a in the uptrend, you say, okay, there's indecision. There's not so much buying. Maybe I should start going short on the short side, or just step out this trade and just watch. Which is vice versa. If you're in a downtrend and you spot a cross a doji, then you say maybe the downtrend is ending. So again, I can't stress this enough, man. Technical analysis, it is pattern recognition. All right, so Sanchez,
Yep.
continue on with the next two, the hanging man and the shooting star.
Yeah. Do you have it pulled up right there right now?
Yes, I got the I got the screen shares for both of them.
Uh, all right.
All
Go
right,
ahead and lower the screen down. Basically, let's see so we can see that pattern.
right
Yeah.
here. It's not big enough for you. I go. I can see it perfect. All right, so basically, the hammer and the shooting star, they're like inverted with each other. Whereas I'm sorry, the hanging man and a shooting star. So like
I see it now.
it's a bearish candlestick. So it's found in an uptrend, and it means that a reversal is imminent, as it says here. Oh, but by the way, this is the book I wrote. Well, it's not really a book. It's like a informational pamphlet. It's called Price Action Trading. If anybody, I can send it to anyone's email if they will for a copy. Just send in a request to trader.life at gmail. It's free of charge. It's like a real primer on technical analysis. Very, very basic. All right, yeah. So as I said, that the hanging man is a bearish candle. As we know, bearish means down. So when you see the hanging man on the chart, and it's like say it's here. This is the words I wrote. It's normally found in an uptrend, and it suggests a reversal is imminent. It's the shooting
Yeah,
star.
so you want to look for those candlestick patterns at the top of those prices. And so a
Yes,
bearish candlestick reversal, you want to see it at the top of that uptrend. So what is an uptrend? Kind of going back over a few basics, as prices making higher highs, when it's at a high point, let's say it opened at 80 and now it's at 90, you might see one of these candlestick patterns at that high price of 90. And that's going to signal that the buyers are getting tired and now the sellers may be stepping in.
yes, exactly. It means yeah, you want to start transitioning from a long position to a short position, and which is the likewise with the shooting star. That's just the inversion of the hammer, which means that where the hammer was a bearish candlestick, which means you will find them in at the top of trends because it means that the trend's about to end. Shooting star is a bullish candlestick, which means that it's found at the bottom of the trend. You know, when the
Yep.
downtrend is ending, it's when you're gonna start seeing shooting star. You know, as you see here, the shooting star pattern, you see it formulates the base and the price shoots up. That's why it's called a shooting star. As why this is the hammer. As you see, it's in an uptrend. So the price shot up, but you see like the form, it's like a hammer form.
It's the
It's like
pattern, the hammer
the
form.
pattern. Yeah, so a bunch of these candlestick patterns, they're named after how they look.
Yep.
All right. So the fourth one, I feel like this is a very important one, the pin bar. Because man, listen, the pin bar. Whenever I see a pin bar on the chart, I just stop and just focus on that pin bar. Because pin bars are very strong candlesticks.
Yeah, they're a very powerful indicator, a symbol that represents, somebody else is taking control because
Yeah.
remember that market is going up or down. So you just want to be on the side of the big money. And these are
Pattern
the
is
signs to look for.
shape. When you look at it, yeah, my friend. Like as we see, there could be bullish pin bars or bearish pin bars. And basically, like one thing with the pin bar, the doji, all the ones we just went over, these are easy to spot, people. They're easy to say that a trend is reversing. It's easy to see whatever the sentiment of the day was, whether it's a bearish day or a bullish day. When you start spotting pin bars, dojis, shooting stars, hanging mans, that's when you know that the pressure is changing from buying to selling or selling to buying.
Hmm.
So tomorrow we're gonna go over the moving averages, which is basically what it is moving averages. You know, and so we're just gonna just keep it with the candlestick. And like, please believe there is millions. There's a bunch of candlestick patterns. You got it's a lot. I don't even want to go through all of them. It confuse people. So I try to
Yeah,
stick.
but there's a subject that you really want to study because this is really the meat and
Yeah,
potatoes. You get to understanding the candlestick means, and you're like, wow, okay. So what's the study tip is you can go look at price when it's at support and go find out when it's reversed, what candy, what price is giving you. So that if it says, hey, whenever prices is at this level and this candlestick forms, it's going to reverse, you're going to take advantage of that because that
yeah.
pattern is going to repeat over and over.
Easy money, people. We cannot
Easy
stress this.
money.
Easy money. When you learn candlestick patterns, support resistance, it becomes like really easy to spot it on the chart. Like I can't
Yeah.
like stock trading. I'm sorry, any kind of trading in general. It's all about pattern recognition. That's why I cannot stress this. Technical analysis, seeing the pattern. Like when you start, hey Sanchez, I think that we need to open up practice accounts so people can trade with us live. Like Forex, because that Forex is a 24-hour market. So we can take them to like a Forex broker, forex.com, FXCM, or Wanda, get them to open up practice accounts and we can start practice trading now. Because I tell people, I could give you these lessons, talk to them blue in the face. Until you actually physically trade, see what happens in the market, you're really not gonna learn anything. I don't know. How do you feel about that? Trading with the hands-on approach or trading by listening? What was your best teacher on
Oh,
trading?
I think my best teacher on trading was
Technical difficulties again. So when he come back in, I'll just stop. But yeah, man, like you want to trade with experience. Like I can talk while I'm blue in the face about what do you do, but until you actually do it yourself, that's when you're gonna understand. Okay. And on top of that, people, we're gonna start doing some live trading here. I'll be getting some requests. So before we go to the next broker,
oh,
before we go to the next
gotcha.
program,
Okay.
I'm gonna take people to like some brokers to use. That might be our next podcast. Before we go to the third, with moving averages, which forex brokers to use to open up a practice account so we can all get them experience with trading. Get them some
Yeah.
exposure.
Yeah, for sure. For me, I definitely feel like you need 30, just put in the time. Success comes in by putting in the time. I tell all my students you want to study at least 30 minutes before falling asleep, and that's a really good life hack for studying.
Yeah, and don't try to soak it all up in one day. A lot of people
Nope.
try to get listen. I've been training like 12, 13 years. There's a lot of shit I don't know. I don't even try to know because it's not in my domain. I tell people when you trade or invest, you want to figure out what type of person you are. Figure out, excuse me, your mindset. If you're a short term, long term, you're a swing trader. Once you figure out your mindset and your goals from the market, I think it'd be easier to trade. Because a lot like people say they want to day trade, but they got long term personalities. You understand, Sanchez? Or people they try
Yeah,
to long term trade, but they have a day trade personality, so they're not reaching their potential because they don't know them as a person. If that makes sense.
right. You got to get comfortable with you, how you want to hold your positions and all that good stuff. The easy thing is just to honestly not even finding your trading style, but learning how to control your investment size. You know, a lot of people want to get rich quick when they see how fast it comes. So you want to be able to understand and really live by law that this is a slow game. You want to get that slow money and let it build with compound interest over time. Once they discover, oh, I can make 1,000 a night, then a lot of people start losing because that's what they go for first.
And I
So
think
being
people need. I'm sorry, but people need to understand. If you make 1,000 a night, you can lose 1,000 a night. That's what a lot of people don't understand that about the investing tip. Oh, I
it
can
goes both
just bet.
ways.
Risk and reward,
Absolutely.
people. Risk reward. But Sanchez he said it perfectly. A lot of people say, oh, I can make this forex is possible. Make it, man, you can make 10,000 a night. You got the right account. You got the right size lots. You're in the right size currency.
Once
You
you
got
get steam going, it's easy to just to keep
yeah,
piling up quick. Boom, boom, boom. One day you be like, man, I'm making 20 bucks a night, bro. Next thing you're like, I'm making 80. Next thing you know, you're making 2,000. And it's just
yeah,
and what I'm talking about is literally, let's just say it takes you 3, 6 months to learn it, a year or two to practice it, and on that fourth year, that third year, you can go up, going up.
yeah.
But
And
that's the realistic you have to give yourself, though. You know what I'm saying? You can't
yeah,
say no overnight shit.
nah, it can't nothing overnight. Especially because a lot of people they're not gonna put in the work to 3, 4 hours a day, 5, 6 hours a day. A lot of people put in the bare minimum 30 minutes to an hour and expect results. So I tell people, listen, slow money's better than no money. Even if I know people tell me all the time, I made $25. Hey, that's $25 that you didn't have. You know? So don't look down on your earnings. Just grind. But thing with Forex, I try to tell people, concentrate on the pips and not the amount of money you made. Because if you can guarantee yourself 15 to 20 pips, lots can always change your lots. But concentrate
Well,
on whatever pips.
here's the other thing on top of that, though, even one better that got you is if you trade patterns. You know what I'm saying? Just like we're showing you candlesticks and stuff like that, the market structure has patterns. You know what I'm saying? So once you get a little bit more experience, you don't even have to start counting pips. You can just say, I know if this pattern completes, its destination is over here. Like let's say with Fibonacci, here's a little tidbit. If it
Yeah,
retraces to the 50%, it's gonna reach the 150%. So you just trade that move instead of whatever pips that might be, because some pairs it might be 40 pips, and other pairs it might be 80 pips, and it just depends on what pair you're using. But it all that don't matter if you're just trading from the move, the pattern to the pattern.
Yeah, and Fibonacci, that's the golden rule, people. We can get more than that. What is it, like 1, 3,
Yeah, you got a
7?
couple of them. You got a couple of
Yeah.
them. 61 8, 15, and
Yeah,
38 2.
61, yeah, 38.2, 61 point. It goes all the way out. But yeah, the Fibonacci, that's more technical analysis, people. So yeah, like I say, the candlesticks that we gave y'all, they was just basic ones. Those was 4 basic ones. We can continue. All right, so what do you want to do, Sanchez? You want to give them a candlestick part two, or go to moving averages for the next one?
Um, it's on you, brother. I'm here for you, man. I'm here to
Yeah,
support. I want people to learn. They need to get this
yeah.
knowledge. You know what I'm saying?
Knowledge is
So,
free, people.
like
Don't
what
pay
he
for
was
no.
saying,
Yeah,
like what he was saying with those candlesticks, you just really want to learn two things: study what those candlesticks look like, and then study where they at on the chart.
yeah.
So you just
That's
need those two pieces, and
pattern recognition.
you don't need me or Trade to Die to show you how to look at a chart. You can pick
Yeah,
up the phone; it's right in your hands, a free app, and just look.
yeah.
Don't worry about it. Just start looking at it. You know what I'm saying, and start recognizing it.
Yeah, man. Like we can't stress that enough. Dang man, with the wrong screen. Yeah, like, but yeah. So those, so we might go to moving averages because there's only two moving averages. You got the SMA and the EMA, and
Yeah,
even though the time frames may change through those, the basic foundation, like the basic parameters of each one remains the same, even though that you can make it longer or shorter. So we might go to moving averages next. So people, basically, what we're doing, we're giving you the basics of price action trading. We started with the support and resistance. Then we went to candlesticks. Then we're doing moving averages. This is all how you formulate your trading plan. This is like it's like the poor man's way of formulating your trading plan. Because like price action is basically exactly what it says. You're following the price. You're acting on the price. You're not worrying about nothing else. And I feel like that's the best way for beginners to trade because you won't get overwhelmed. Well, how do you feel about that, Sanchez?
I feel the same way, brother. I feel the absolutely same way. I like technical analysis because here's an advanced tip I'll give you guys. I'll be real with you. All right, I'm gonna spill the beans a little bit here. All right. So what we're looking at is transactions. All right, you want to write this down. We're looking at transactions between what? Between buyers and sellers. All right. So price action. Let's give a real life example. You want to write? Get your notepad. Let's say the iPhone 10 come out. Right. When it first come out, it might be worth 1,000, and then the next year it's only worth 900. Okay. Now let me tell you this. I'm gonna tell you this. It only went down because there was less buyers. Where do those buyers go? They went to buy the new iPhone. So that
Supply and
price
demand.
drops.
It's supply and
So this is
demand.
what I'm saying. So you start to learn this and you start to use it in real world and all that. And I mean it's beautiful. So yeah. So what I was getting at with that though is those buyers and sellers, you read them on them candlesticks. Them
Yeah,
candlesticks are going to tell you when the buyers are there and when the sellers are there. Why? Because the candlestick is the first place that you see that buying and selling transaction. And then it goes to the moving average. And then it goes to the MACD. Then it
yeah.
goes to Fibonacci. But
Support resistance. You
but
probably should
as
get the
that
candlesticks
as
first.
yeah, even support and resistant. But that candlestick itself, just in prime black and white beauty, you gotta learn it. Because that's I feel like
Yeah,
if you learn how to read the receipt of the transactions, then you can kind of understand where the momentum's going.
yeah. Because exactly, man. Those candlesticks is where it's at. Like, all you need to know is candlesticks was around in Japan for 300 years. They came to America in the 80s and they already done took over. As you see now, people call them candlesticks, not Japanese candlesticks. Watch, 100 years from now, they're going to be called American candlesticks. That's
Yeah,
how we get down in America.
we started off I think Americans was using bar charts. There's a thing
That
called bar charts.
bar charts are like the worst. They're basic, man. Compared to like the candlestick, candlestick shows you a complete. Like for instance, it shows you a complete tell, like the high, the
Yeah.
low. Like it tells you a lot. Like a bar chart is really
And
basic.
there's some people that's actually trying to make new ways to read price, you know what I'm saying? But it's just hard to get away from that open, high, low, and close.
Yeah. Speaking of that, you ever heard of tick charts? I don't like tick charts. They're
Yeah, I don't mess with tick charts.
yeah yeah.
There's this new one called raindrop candlesticks, and it's supposed to use high, low, close, and all that. but it adds volume to it too. So it's gonna show you like all in one, like was the buyers up high or low.
Yeah,
So
that's good. So yeah,
um I would want to test it one day, but yeah, I'm with it. I'm just with the old Jane, the old
yeah.
faithful.
Oh, faithful. We tell people, man, price action where it's at. You just follow the price around. You really don't worry about outside news. Like Sanchez said, supply and demand. That's the biggest part of technical analysis. All right, for real. Technical analysis, they make three major assumptions. They assume things about the market, but the major assumption they seen is supply and demand. That's why price action trading is so important because there's no factors, no outside influences, there's no outside factors influencing the price. It's pretty much the price set.
Yeah,
Who we're trying to pay, who we're trying to buy, we're trying to sell it. That's the price itself. That's like the what was it? Adam Smith, the invisible hand, something like that. So that's why a bunch of traders swear by the price action because again, it's pretty easy, man. Like we can't stress this enough, man. Pattern recognition. Like a lot of people get so confused, and I tell them you're gonna have to start trading yourself. You're gonna start spotting patterns, and then it's not gonna be easy, but it's not. It's definitely not hard. It's only hard because you don't understand it.
you don't understand it, but once you put some effort and understand it, it's definitely gonna get better.
Yeah, people. So
My
you.
time's running short. Trap or die. So let's go ahead and get into the last piece.
All right,
Go ahead and
Sanchez.
get it,
That's about it, though.
or is
Good
that
brother.
it?
Hey, so Sanchez coming back on. What's today? Thursday. What's up with tomorrow, good brother?
Thursday,
No,
Friday.
tomorrow. Yeah,
Hey,
tomorrow's Friday.
we're here. We're here for
All right.
y'all.
Friday, 8 o'clock, people. It's a hot day. Hey, Sanchez, we talking about moving averages, EMA, SMA. All right. I got the screenshots in the book.
Okay. All
All right,
right.
brother. All right.
All right. Let's get it.
All
Take it
right.
easy, guys.
Dessert. All right, people. That's my man Sanchez. Like you say, like we all say here. Um, we gon' make it. But yeah, it's your boy Trader Down this Thursday night. Let's see. Like I say, I got the book. Well, it's more like an informational pamphlet. I don't want to say it's a book. It's only about 15 pages. Actually, I got like 4 or 5 of them written. It's very basic information for a beginner. So someone that got experience, they might read the book and say, "This is really basic information." But somebody who never invested in the market, or you know, when you read those books, you get kind of confused. I wrote the book for y'all. So if you got any requests, like I say, hit me up on trader.life at Gmail. Hit me up on Facebook, trader.life. Hit me up anywhere, man. Trader Dot. On that note, people, we're gonna be out, and tomorrow we're doing moving averages, exponential, EMA, simple, SMA. So on that note, people, just remember, we gon' make it. It's your boy Trader Dot here. We about to be out. Oh, we got a sponsor coming too, people. Yeah, we got a sponsor. Moves are being made. On that note, we gonna make it.